Hey everyone, welcome back to the Investor for Life channel. If you're new, don't forget to hit that subscribe button, give this video a thumbs up, and hit that bell so you never miss out on any of the content I've got coming your way. Today's video is going to be all about building a dividend powerhouse by adding all of the JEPS. And that is JEP-B, JEP-Q, and JEP-Y. I'm just going to refer to them as the JEPS throughout this video. But before I dive into that, I want to give a shout out to all of you. Your support means a lot, and your continued support is what keeps this channel going. We just crossed over the 1900 subscriber threshold. Let's push it up to 2000, guys. I really do appreciate all the support. Having a lot of fun sharing my portfolio and sharing these videos with you. So let's continue the journey. So let's get into it, all right? So if you're seeking some true passive income off just 3 investments, then by adding the JEPS to your portfolio, you have just supercharged your ability to earn more money. By now, these three, that is JEP-B, JEP-Q, and JEP-Y, the JEPS, are no strangers to investors, but for those of you that may not be as familiar, I will briefly cover what each one is. Then I want to show you how much money could potentially be produced by adding these three to your portfolio. Then you can decide if these investments are for you. First up is JEPI, or JEPI as it is often referred. JEPI stands for the JP Morgan Equity Premium Income, and it's an exchange-traded fund. FactSet describes JEPI as an actively managed fund that invests in large-cap U.S. stocks and equity-linked notes, ELNs. It seeks to provide similar returns as the S&P 500 index with lower volatility and monthly income. JEPI produces income via selling covered calls. It has a current expense ratio of 0.35% and currently carries a 9.34% dividend yield, which is $4.98 per share annually. Year-to-date, JEPI is currently down 1.23%. And here's a list of its top 10 holdings with Amazon and Microsoft leading the way. Next up is JEPQ, or JEPQ as it is often referred. JEPQ stands for the JP Morgan Nasdaq Equity Premium Income. FactSet describes JEPQ as an actively managed fund of U.S. large-cap companies from the Nasdaq 100 index, assessed and managed using ESG factors and a proprietary data science-driven investment approach. The fund also invests in ELNs and seeking income generation. It has a current expense ratio of 0.35% and currently carries a 10.94% dividend yield, which is $5.31 per share annually. Year-to-date, JEPQ is currently up 19.02%. Here's a list of the top 10 holdings with Microsoft and Apple leading the way. Last up is JEPY. JEPY stands for the Defiance S&P 500 Enhanced Options Income. FactSet describes JEPY as an actively managed fund seeking to provide enhanced monthly income by placing bullish bets on the S&P 500 index through the 0 days till expiration put option writing strategy. The second objective of the fund is to seek limited exposure to the performance of the index. It has a current expense ratio of 0.99% and currently carries a 59.21% dividend yield. This ETF is only a few months old and has not established enough history for an annual payment. Year-to-date, JEPI is currently down from inception, but there is not enough history for a year-to-date percentage. This holding sells covered calls and does not have a traditional top 10. Okay, now that we got the basics of what the JEPs are all about, how can adding these supercharge your portfolio? Let's take a look at the math. For this scenario, let's say we are going to invest $1,000 into each of these holdings. Each of the JEPs pay monthly, so we'll take a look at the numbers both with and without the DRIP to show the differences. We'll use a 1-year timeline as I want to keep things relatively simple. So if we take our $1,000 divided by the current share price at the time of this filming, which is $53.80, you get roughly 18.58 shares of JEPI. So let's take a look at the dividend calculator and see where we'll be sitting with JEPI after just 1 year. Okay, so taking a look at the calendar, over here at marketbeat.com, I'm going to type in JEPI. Should pull up. Individual stock, yes. Distribution is monthly. So we'll start out with the DRIP. The number of shares we're going to enter is the 18.58. But the current share price will already be input. Annual contribution, we're going to say 0. Let's just run it with what we have. And the dividend yield was 9.34. We'll just say 1 year. All right, then you go to calculate your dividends. And you'll see after 1 year, your $1,000 is now $1,112.44. So you've picked up $112.44 just after 1 year, just off JEPI. And you'll see you started with your 18.58, and now you own just over 20 shares, so after the 1 year. So JEP's new total is $1,112.44. So you've added $112.44 onto the total position, of which $93.36 was from dividend income alone. Okay, moving on to JEPQ. You take your $1,000 investment, you divide it by the $48.52 share price, gives you 20.61 shares. All right, so over at the dividend calculator, following the same format as we did with JEPI, come over, we're going to put in our JEPQ, select it as soon as it auto-populates there. Monthly drip, yes. Number of shares was our 20.61 from our $1,000. Annual contribution will be 0. The dividend yield was 10.94, and we want the 1 year. Let's see what we get. So new balance will be 1127.79. Come down here. So you start with your 20.61. You were paid $109.40 in dividends for the year. Brings you up to 22.57 in shares, with your new total being 1127.79. So JEPQ's new total is $1,127.79. So you added $127.79 onto your principal, and $109.40 was from the dividend alone. Okay, so moving along to JEPY, take your $1,000 divided by the current share price of $18.34. Again, this is at the time of the filming, equals 54.52 shares. All right, over at the dividend calculator, we'll follow the same format as we did before. Type in JEPY this time. Individual stock, yes. Distribution is monthly on this one, just like the others. Drip, yes. We are going to start with our 54.52 shares. That's from our $1,000. Annual contribution 0. The dividend on this one is 59.21%. So you can expect that a lot more of your money is going to come from this one. And the 1 year that we've been doing. We'll calculate here. So your $1,000 became $1,695.78. Scroll down. You'll see here you're just under $600 in annual dividends just from the 1 year. So you'll now have 89.72 shares at the end of the first year with a new balance of 1695.78. All right, so the new total for JEPY was 1695.78. So you've added an extra $695.78, of which $592.36 came from dividends. Okay, now that we've taken a look at all three, the JEPE, the JEPQ, and the JEPY, let's total them out, and we'll see what we made after the first year. Okay, so to total this out, let's take our JEPE. The JEPI was $1,112.44. The JEPQ, $1,127.79, and the JEPY, $1,695.78, brings us to a grand total of $3,936.01. So we have added $936.01 to our initial investment of the $3,000, which was the $1,000 in each, and $795.12 of that came from just dividends. Now, the reason I wanted to focus on just the 1 year is realistically, JEPE, JEPQ, you might hold on to those ones a little while, but the JEPY, being that it's so volatile, that it just as interesting as it is, many investors may not hang on to it longer than a year. So I wanted to show you what it would be like if you just held it for a year, what you could potentially make on that. So now we'll have a little fun. I'll show you just the 5 years and the 10 years out, just in case these holdings stick around that long, what you could potentially make. But nonetheless, after 1 year, you pocketed $936. So if you held on to JEPE for 5 years, you'd be at a total of $1,721.25. And if you held on for 10 years, your new total would be $2,938.21. So for JEPQ, if you held on for 5 years, you'd see your total be at $1,841.09. In 10 years, it'd be worth $3,359.15. Now for JEPE, or JEPY, I should say, this one is probably a little bit different, as if this fund's even going to exist in 5 years, 10 years, things like that. In 5 years, this would be worth $13,990.89, and you'll see the real magic comes with something like this in 10 years, when it's worth $195,765.16. So now clearly this is just speculation, as there's no way to tell if this fund will even be around in 10 years, let alone be able to provide the figures that you're seeing here. So you just got to kind of use your imagination, think about the what ifs, and decide for yourself if this type of investment is something that you want to get involved with, just purely based on what we're seeing here. So how does all this translate into a powerhouse supercharged dividend portfolio? If you take your initial $3,000 investment into the JEPS after 1 year, you do have that $3,936.01. If you held on for 5 years, the JEPS are worth $17,553.23. If you held on for 10 years, it is now worth $202,062.52. So you can see within a 10-year span, not only is it supercharged, but you are making a lot of money just off 3 initial investments with JEPS. And there you have it, guys. An easy way to supercharge your portfolio just by applying a simple $1,000 investment into the 3 JEPS and let it grow over time. If you found this video informative, please give it a thumbs up. Please share it with your fellow investors. Please subscribe to the channel, guys. And please comment below what you think. If you had any insight, any further comments, anything for anybody viewing this video would have, I need to be able to read. And we will catch you guys on the next one. Happy investing.